Hey there, and welcome back to the Deep Dive.
Great to be here.
So, you've shared some really interesting stuff with us lately. The latest earnings numbers from, well, the big Japan Railways companies, JR Central, JR West, and we got a little bit on JR East, too.
That's right. Mainly focused on that fiscal year ending March 2025.
Exactly. So, the big mission for this deep dive is basically this. How do these companies stack up? We're going to look at these numbers you shared, the financials, what their main business lines are in their different regions, how they're bouncing back from, well, everything with COVID, tourism trends.
Is what they're planning for the future. Yeah.
Right. And the whole point is to give you the essential info, the key takeaways, nice and simple, without you needing to read every single page of those reports.
Precisely. It's a good chance to compare JR Central and JR West especially. See their strategies. Like you said, the info on JR East from these specific sources is a bit lighter on the financials.
Okay, let's jump right in then. The financials. The heartbeat, right? Fiscal year ending March 2025. Let's start with JR Central. That's the Tokai region.
Right.
Their revenue hit $1,831.8 billion. That's up 7.1% from the year before. Pretty healthy.
Yeah, solid growth on the top line.
But look at the profits. Operating profit up 15.7% or $702.7 billion. Ordinary profit up 18.7% to long $649.2 billion. And net profit, the one shareholders watch closely, up 19.3%, $458.4 billion. That's quite a jump.
It really is. That scale of profit growth is fascinating. It suggests, not just that the Tokaido Shinkansen, their main engine, has recovered really well, but maybe they're also getting more efficient, finding cost savings. That kind of profitability, it really sets them up well for investment and for shareholder returns later on.
Okay, good point. Now let's shift over to JR West, Western Japan. Their picture is also looking positive, definitely showing growth, but, well, maybe a bit more moderate.
Yeah, that's fair.
Yep.
Their revenue was $1,820.0 billion, pretty close to JR Central, actually up 6.6%.
Yeah.
And you mentioned these are the restated figures they provided.
Right, so they adjusted past numbers for a better comparison. Important detail.
Very. And their operating profit was $190.0 billion, up 5.5%. Ordinary profit, $174.0 billion, up 5.0%. And the net profit attributable to owners, $115.0 billion. That's only up 0.9%.
So still moving up, but definitely not that same kind of surge we saw with JR Central on the profit side.
Right. And it makes sense when you think about it. JR West covers a much more diverse area, Kansai, Hokuriku, Sanyo Shinkansen, lots of conventional lines further west.
A wider net.
Exactly. So their growth is probably coming from different places, maybe recovering at different speeds across those regions and business types.
Okay, so let's talk about those business types. Where's the money coming from? For JR Central, it feels pretty obvious, right? The Tokaido Shinkansen, Tokyo, Nagoya, Osaka, that's the powerhouse.
Absolutely dominant.
But they do more than just run trains. They've got big retail operations. JR Central Towers in Nagoya is huge real estate, hotels.
Leveraging those station hubs.
And of course, the big future project, the Chuo Shinkansen, the maglev. That's a massive long-term investment for them.
It really is. Their strategy seems very tightly focused around that core Shinkansen line and building out from there, plus this huge bet on the future with the maglev.
Okay, then JR West, as you said, wider geographical area, Sanyo Shinkansen, loads of conventional lines. Their business seems broader, too.
Yeah, I'd say so. Mobility, obviously the trains. But also significant retail shops and stations. Their VN Hotel brand.
Right, the hotel.
And real estate development. They mentioned specifically developing around Osaka Station, Hiroshima Station, kind of integrating transport with urban development across their network.
So a bit more diversified, maybe spreading the bets across different sectors and regions.
That's how it looks, using the railway as a platform for broader regional economic activity, not just relying purely on the long-distance high-speed travel like JR Central tends to.
And JR East, we don't have those detailed financials here, but we know their turf. Eastern Japan, the massive Tokyo area, up north.
Yeah, their investor relations website has the details if you want to dig deeper. But based on this, the focus is clearly that eastern corridor.
Which you'd imagine has different dynamics again, right? Huge commuter flows in Tokyo, regional travel.
No.
Probably less reliant on just one single Shinkansen line compared to JR Central.
Definitely a different operating environment.
Yes.
Heavily influenced by the Tokyo metro economy and daily travel patterns.
Okay, let's talk recovery. Post-COVID life and tourism, how's that playing out? JR Central saw passenger traffic, measured in passenger kilometers, up 4.4%.
At least an increase.
What caught my eye was the shift in why people are traveling on the Tokaido Shinkansen. Leisure and hobbies. That used to be about 20% before COVID, and now it's up to around 25%.
Interesting. So maybe travel habits have shifted a bit. Less business, more fun.
Seems like it. And the other big one, inbound tourism, international visitors. Their revenue from that went from maybe 3% of transport revenue back in 2018 to around 8% now. That's a pretty significant boost.
Wow, yeah, from 3% to 8%. That really shows the impact of borders reopening and tourists coming back. It's clearly a major growth driver for them right now.
What about JR West? They're seeing good recovery too, right? Especially in retail.
Yeah, they highlighted strong recovery in people using their station buildings, shops, restaurants, and also their VN hotels.
Yeah.
More foot traffic, more stays.
And they're looking ahead, trying to capitalize on upcoming stuff.
Definitely. They explicitly mentioned gearing up for the Osaka Kansai Expo.
Ah, yes, the expo.
And generally benefiting from increased inbound tourism, just like JR Central. They also point to the Hokuriku Shinkansen extension to Suruga as a plus.
So infrastructure improvements helping too. How's ridership looking overall?
It's up year over year on the main Shinkansen lines, Tokaido, Sanyo, Kyushu. But compared to pre-COVID, back in fiscal 2018, recovery is still a bit uneven, varies depending on the specific route and time period.
In hotels, you said Vienna was recovering.
Well, their overall hotel occupancy rates showed a bit more of a mixed picture across their different regions. So recovery isn't perfectly uniform everywhere they operate.
Okay, so JR West seems to be juggling a few different recovery drivers, events, tourism, specific line improvements.
Exactly, pursuing multiple angles across their broader network.
Right, let's look forward then. Outlook, shareholder returns. JR Central sounds pretty upbeat. They're boosting the dividend.
Yeah, planning to increase the year-end dividend by 1 up to 16 per share. They're citing that strong performance on the Shinkansen and their conventional lines.
And they announced something pretty big, a share buyback.
Huge, yeah. A plan to buy back up to 45 million of their own shares. That could be worth up to 100 billion between May 2025 and February 2026.
And then they're just going to cancel those shares.
That's the plan. Cancel them in March 2026. It's a major move to return value to shareholders. Reduces the number of shares out there, which typically increases earnings per share.
Boosts the stock price, potentially?
Exactly. It signals management thinks the stock is maybe undervalued, and it definitely shows a strong focus on shareholder returns and using their capital efficiently.
And strategy-wise, they're talking about business reform and revenue expansion.
Right. The reform part has a big cost reduction target, 80 billion over 10-15 years. And revenue expansion is banking on continued growth in, you guessed it, leisure and inbound travel.
Makes sense. Okay, JR West's outlook.
They're focused on hitting the targets in their current medium-term management plan, which runs to 2025. Big focus there, again, is the Osaka Kansai Expo and inbound demand.
Leveraging those specific opportunities.
Precisely. Plus, maximizing the impact of those developments we mentioned around Osaka and Hiroshima stations. They are forecasting a slight increase in net profit for the next fiscal year, so continued modest growth expected.
Okay, didn't see specifics on dividends or buybacks for JR West in these notes, though?
No, not in the snippets we looked at. Their focus seems more on executing that medium-term plan and capitalizing on regional projects and events.
All right. So, wrapping this deep dive up, what's the picture? Both JR Central and JR West are clearly moving forward, financially positive, getting a lift from travel recovery.
Definitely.
JR Central really stands out, though, with that strong profit growth and those very direct shareholder return actions, the dividend hike, the massive buyback.
Yeah, they seem quite confident and are actively rewarding investors.
JR West is growing, too, maybe more steadily, with a strategy that looks more tied to regional development, specific events like the Expo, and leveraging their broader network.
That captures it well. Different focuses, different regional footprints, but both navigating the post-pandemic world pretty effectively. Tourism is key for both.
And JR East. Well, we know they're huge, especially around Tokyo, but harder to compare directly just from this information.
True. We'd need their specific earnings data for a full comparison.
So it all boils down to our final question for you listening. Considering what we've discussed, which JR company do you think has the best potential going forward? It's a tough one. Depends on what you value more, that explosive profit growth and shareholder return focus, or the broader regional development play. Lots to think about.
Absolutely. Give us a thumbs up if you found this useful, and subscribe for more deep dives.